right, here's the recap of just going through the market for today on Wednesday. We went ahead and look at price action here. You can see that we were coming through the market open, moving through the 200. We did get the back test, broke down on the 21, came down back and tested the 200, and then came up and back tested the 21. The one thing with this is you are showing a bull or a bear flag in here. The 21's putting pressure down on the chart, and you're coming through the 200. Expect the breakdown. So if you were looking at taking a trade in this, the trade would be when you back test the 21 like it did. Put your stop above that area. And then, like I've said before, if we were looking at this, this would be kind of that trade. And you'd obviously run it out a little bit to have it move down, because that would have been the idea of this trade. As we can see, it came through, broke through price action on the 200. Price action broke through the 200, and then it just came back up. Now, if we go back in time on this, we can go ahead and look at the 5-minute and see if there was a good, strong trade. This is the area that we're looking at on the 15. You can see that the 200 and the 21 here showed the same bear flag on the 5-minute. The one thing if you got in on that back test, this would have been that quick trade, and then you're already showing reversal right through here. So this would have been a quick, let's get out of it kind of signal. If you stayed in it, because you were watching the 15, when it back tested again and came back through, this is where we'd want to see commitment, because it already started to reject. We would want to see this 21 cross through the 200 and start pushing the price down. So now that we're seeing this, try to back test here, the same thing, we go back into the 5-minute, we're seeing it fight in this area. So we'd start to want to look at this and say, hey, maybe we should be getting out. We already had it once try, it came back up. Here's the second try. We're still fighting price action. It's not committing and rolling over. It started to commit, and then you can see it just went sideways. And there's a reason why this is actually happening this way. So if you did take this trade and you started analyzing it that way and you just got out right here, it's still 0.7 to 1, trade. You didn't get stopped out. Everything traded out. So the trade could be successful depending on how you're looking at it. So definitely could have been a good trade. Definitely watched, and that's kind of how you want to analyze your trading when you're going through the market. I'm going to go ahead and move forward on the 15-minute just to kind of take a look at this. We can see that it's fighting back into this area. Obviously, if we get it back above this 21, what we'd want to do is look at taking a trade to the upside if we can get 21 to curl. If there's the 21 to curl, if this back test here, you could look at getting into the long trade in here. So there's your back test. So you could be looking at getting in this long. Now you can see these 3 white lines on my chart. These 3 white lines on here. And the reason why they're on here is because this is when the FOMC meeting is coming out. This news is coming out about our economy and how it's going to affect us. If they're going to lower rates, raise rates, all that kind of stuff. And Powell's going to speak. So there's different time slots marked here, basically, but this is kind of when information starts to be slipped. This is when the notes come out for what he's going to talk about, and this is when he talks. So watch price action as it hits these areas. Now, if you didn't know this kind of stuff, that's kind of what I want to show. That's why I showed this trade throughout the day and the price action, but that's why you're seeing this weird price action and seeing how this is coming in and almost going flat, because it's getting ready for a news event. For price action. So, but if you didn't know and you're just trading, regular TA, but it does work, and that's why I'm kind of just walking through this and show you. Typically, when you know these kind of news events are happening, this is a big red flag to stay away from the market. So today, I wouldn't even take in a trade. in here. I would have just said, I'm going to stay away because I know this is happening and I just want to watch price action. So I'm going to go ahead and just move through the 15-minute, and let's go ahead and watch it as it hits these lines and what happens. So this is coming into the release here of the notes. And you can see how fast this came open and just went straight down. So if you were in the 5-minute and were watching this, I guess I'll zoom in real quick on this just to kind of show you. If you were in this trade, it did come down and it didn't stop you out here on this first drop. But on this next candle, depending on how this bled out, you may not even have a chance to get out. But a lot of times when you see the market nice and pretty and then just starts to move, it's up to you on what you want to do, but that's a good sign of just exit. There's something wrong with price action. So if you didn't know the news was there, that's what's driving this, is the news in this. It definitely came out and stopped you out right through here. So you would have lost on that trade. Went ahead and traded down. This is where you don't just flip the market either, because then all of a sudden it went all the way back up, and this move that was moving along before the news came out, it just kept coming when Powell started to talk. It just drove this up. So then we watched this drive up, and you're looking for a trade if you wanted to. It's kind of too late. The price action moved, right? And it moved based on news. So if we're looking at other indicators and we started to really break this down, a lot of this behavior does not fit into a standard TA, and we all know why. It's because of the news. Now you can look up the calendar for events within the financial markets. It's a great thing to do because of this reason. That way you can mark your charts and know when to just stay away from the day and don't worry about it. A lot of people don't trade during FOMC meetings. When Powell's going to speak, you want to stay away. And there we are at getting close to the end of the day here. What I'm looking for, just to go into the evening, is something like this, price action to kind of bleed out here. Watch this get above it, break through, back test in here, and it wouldn't surprise me if we went ahead and just X'd out all this volatility and stuff that happened throughout the day, and we end up kind of back into the 102 range, or back down around this 20 or this 200 on the 15, stuff like that. It wouldn't surprise me if we bleed out. We'll watch it though and kind of see how it goes. The only other thing that we need to do as the market closes, I do need to mark the highs, just like I did over here from the day prior. So we mark this high for the day, and then we'd be looking at marking the low down here. The reason why I always mark these is because you can see like this line right here is from this past through here, and it's amazing how things interact. So you can see where this bounce right here is from last support. This high up here, if we turn on other days, I don't have them turned on right now, but there's actually other days. So Monday is pretty close to this. Monday's high in that window is right up in this range. So it is amazing how you can use these support and resistance throughout the week and look for areas for bounce. So anyway, that should do it for today's recap. Hope that helps you out.